Imagine someone gives you a choice. You can have a higher income today, but have no plan for tomorrow. Or you can have a clear financial strategy for the next 10 years and slowly build your money, your skills, your assets, and your financial freedom. Which one would you choose? Most people focus on the next paycheck. They think about what they're going to buy this week. They think about the bills they need to pay this month. They think about the next vacation, the next phone, or the next car. But very few people stop and ask a more important question. Where do I want my money to take me 10 years from now? Because 10 years is a long time. A decade of good financial decisions can completely change your life. And a decade of poor financial decisions can leave you in exactly the same place. So in this video, we're going to build a simple 10-year money plan. We'll talk about what you should do with your income, how to control your spending, how to build savings, how to increase your income, how to invest, and how to use your money to create more opportunities. This isn't a get-rich-quick plan. It's a long-term strategy. And the earlier you start, the more powerful it can become. Let's begin. Year 1. Get control of your money. The first year is not about becoming rich. It's about getting control. Before you can build wealth, you need to know where your money is going. Imagine trying to drive to a destination without knowing where you are starting. You would have a difficult time planning the journey. Money works the same way. You need to understand your current financial position. How much do you earn? How much do you spend? How much debt do you have? How much do you save? What are your biggest expenses? And what financial goals do you have? Start tracking your income and expenses. You don't need a complicated system. A simple spreadsheet, notebook, or budgeting app can work. The goal is awareness. You want to know exactly what happens to your money after you receive it. During the first year, also look for unnecessary expenses. Subscriptions you don't use, impulse purchases, excessive entertainment spending, unnecessary debt, and purchases that are mainly designed to impress other people. You don't need to eliminate every enjoyable expense. You simply need to make sure your spending is intentional. Year 2. Build your emergency fund. Once you understand your money, your next goal should be financial protection. Life is unpredictable. Your car can break down. Your equipment can stop working. You could lose your job. Your business could have a bad month. An unexpected family expense could appear. If you have no savings, an emergency can force you to borrow money. And if that debt carries high interest, one emergency can turn into months or even years of financial stress. That's why an emergency fund matters. Start with a small target. Maybe your first goal is $100, then $500, then enough to cover several months of essential expenses depending on your situation. Don't worry if it takes time. The purpose isn't to build it overnight. The purpose is to create a financial cushion. When you have savings available for emergencies, you don't have to panic every time something goes wrong. You have options, and financial options are extremely valuable. Year 3. Eliminate expensive debt. Now it's time to look at debt. Not all debt is the same. Some forms of borrowing can potentially help you acquire an asset or build a business. But high-interest consumer debt can be extremely expensive. Credit card balances, payday loans, expensive personal loans, other forms of high-interest borrowing. The interest can work against you. You might think you're making progress because you're making monthly payments, but a significant portion of those payments could be going toward interest. So during this stage of your 10-year plan, make eliminating expensive debt a priority. List your debts. Write down the balance. Write down the interest rate. Write down the minimum payment. Then create a strategy. You could focus on the highest interest debt first, which is often called the avalanche method. Or you could focus on the smallest balance first, which is commonly called the snowball method. The method matters less than consistently making progress. The objective is simple. Stop allowing expensive debt to consume your future income. Year 4. Invest in yourself. Now we get to something extremely important. Your biggest financial asset may not be your bank account. It may be your ability to earn money. Think about it. If you have a skill that allows you to earn $500 a month, improving that skill could potentially increase your income. Maybe you learn sales. Maybe you learn marketing. Maybe you learn programming. Maybe you learn video editing. Maybe you learn photography. Maybe you learn a trade. Maybe you learn how to manage a business. Maybe you develop expertise in your current profession. The exact skill doesn't matter as much as the principle. Become more valuable. The more valuable your skills are, the more opportunities you can potentially access. Don't just spend money on things that make you comfortable today. Spend some of your time and resources developing abilities that can improve your income for years. A better skill can produce income repeatedly. That's why investing in yourself can have an enormous return. Year 5. Build a second source of income. By year 5, you should be thinking beyond your primary income. If your entire financial life depends on one paycheck, you're vulnerable. What happens if that income disappears? This doesn't mean you need 10 different businesses. You don't. Start with one additional income source. Maybe it's a small business. Maybe it's freelancing. Maybe it's consulting. Maybe you sell products. Maybe you provide a local service. Maybe you earn income from investments. Maybe you turn a skill into a side business. The objective is to create another financial engine. Imagine your main income pays your essential expenses. Then your additional income can be used for savings, investing, debt repayment, or business growth. That can accelerate your progress dramatically. Year 6. Increase your savings rate. Now that your income is hopefully improving, don't make the mistake of immediately increasing your lifestyle. This is where many people fail. They get a raise. Then they buy a more expensive car. They move into a more expensive house. They start eating out more. They upgrade their phone. They increase their subscriptions. And suddenly their higher income disappears. Instead, use part of every income increase to improve your financial position. If your income goes up by $500, you don't have to spend all $500. Maybe some goes toward investing, some goes toward savings, some goes toward business growth, and some can improve your lifestyle. You should enjoy the benefits of making more money, but don't allow lifestyle inflation to consume your entire financial progress. Your goal is to increase the gap between what you earn and what you spend. That gap becomes your wealth-building engine. Year 7. Start building assets. Now we come to one of the most important concepts in wealth building. Assets. An asset is something that can potentially hold value or generate income. Examples can include businesses, investments, and other productive assets. The exact assets you choose will depend on your country, financial situation, knowledge, and risk tolerance. The important principle is this. Don't spend your entire life buying things that only take money from you. Start acquiring things that can potentially produce value. For example, instead of spending every extra dollar on consumer goods, you could allocate some money toward diversified long-term investments if they're appropriate for you. Instead of spending all your capital on lifestyle upgrades, you could reinvest in a business. Instead of constantly buying things that depreciate, you could focus on building productive assets. The goal is to gradually move from being only a consumer to becoming an owner. Year 8. Scale your income. By year 8, your focus should be bigger than simply saving money. You should be asking, how can I make my income grow? If you have a job, can you qualify for a higher paying position? Can you negotiate better compensation? Can you develop a specialized skill? Can you move into a more valuable field? If you have a business, can you serve more customers? Can you improve your margins? Can you introduce new products? Can you create systems? Can you hire help? Can you expand into another market? Wealth is often created when you combine income growth with disciplined money management. Saving $50 a month is useful, but increasing your earning capacity by hundreds or thousands of dollars per month can dramatically change your financial trajectory. That's why you should never stop improving your ability to create value. Year 9. Protect what you have built. At this point, you may have more savings, investments, business assets, and income than you had when you started. Now you need to protect them. Building wealth is only one part of the journey. Keeping it is another. Avoid unnecessary financial risks. Don't put all your money into one investment. Don't invest in things you don't understand. Be careful with debt. Maintain appropriate insurance where relevant. Keep financial records organized. Separate personal and business finances if you own a business. And be cautious about people who promise guaranteed high returns. The more money you accumulate, the more important risk management becomes. You don't want one bad decision to erase years of progress. Year 10. Design your financial freedom. Now imagine it's 10 years from today. You're earning more. You have fewer unnecessary expenses. Your emergency savings are established. Your expensive debt is under control or eliminated. You've developed valuable skills. You have multiple sources of income. You own productive assets. and your money is no longer disappearing every month. What does your life look like? Maybe you own a successful business. Maybe you have a strong investment portfolio. Maybe you're working a career you genuinely enjoy. Maybe you're financially independent enough to have more choices about how you spend your time. That's what the 10-year plan is really about. It's not simply about having a large bank balance. It's about creating choices. The choice to leave a job you don't like. The choice to start a business. The choice to take time off. The choice to help your family. The choice to invest in opportunities. The choice to live without constant financial stress. Money gives you options when it's managed properly. The 10-year money formula. Let's make the entire plan simple. Year 1. Track and control your money. Year 2. Build emergency savings. Year 3. Attack expensive debt. Year 4. Invest in valuable skills. Year 5. Build an additional income stream. Year 6. Increase your savings rate. Year 7. Build productive assets. Year 8. Scale your income. Year 9. Protect your wealth. Year 10. Use your wealth to create financial freedom and choices. You don't have to follow these years perfectly. Your circumstances may require a different order. Maybe you need to focus on debt first. Maybe you need to build your emergency fund before investing. Maybe you need to increase your income immediately, because your current income doesn't cover your essential expenses. The timeline is a framework. The principles are what matter. What if you only have a small income? Let's say you earn $500 a month. You might think, this plan doesn't apply to me. It still does. You simply start smaller. Maybe you save $20, then $30, then $50. Maybe you learn a skill for free before paying for advanced training. Maybe you start a small side business with a tiny amount of capital. Maybe you invest only after establishing an emergency fund and understanding the risks. The goal isn't to copy someone else's numbers. The goal is to improve your own numbers. If you're earning $500 today, your 10-year goal could be to become someone who earns $1,000, then $2,000, then perhaps more. The exact number will depend on your circumstances and opportunities. But the mindset is the same. Increase your financial capacity year after year. The biggest mistake to avoid. There is one mistake that can destroy the entire 10-year plan. Waiting. Waiting until you earn more. Waiting until you have more money. Waiting until you understand everything. Waiting until the perfect opportunity appears. You don't need to know everything before you begin. You need to take the next sensible step. Track your money. Save your first amount. Pay down expensive debt. Learn a skill. Increase your income. Start investing appropriately. Build assets. Repeat. 10 years will pass whether you have a plan or not. The question is, what will your financial life look like when those 10 years are over? Final message. Your financial future is not built in one day. It's built through decisions repeated over thousands of days. The money you earn today can either disappear into consumption, or some of it can become the foundation for your future. You don't need to become rich this year. You need to become financially stronger, then stronger again, and stronger again. Imagine, what happens when you combine 10 years of discipline, increased income, controlled spending, investing, skill development, and productive assets? The person you become financially could be completely different from who you are today. So don't just ask, how much money can I make this month? Start asking, what can I do with my income today that will make my financial life better 10 years from now? That question can change the way you spend. It can change the way you save. It can change the way you invest, and it can change the way you think about money. Start with what you have. Create a plan. Stay consistent. Increase your income. Build assets, protect your progress, and give your money enough time to work. Because 10 years from now, you'll be glad you started today. Thanks for watching, and I'll see you in the next video.